This conference will now be recorded.
Okay. Morning. It is June 22nd, 2022, start of summer, and we're going to turn the meeting over right from the start with Ben from Elements Roofing. So Ben, feel free to tell us about what you've got to offer our brokers.
Hi, gang. My name is Benjamin Crawford with Elements Roofing. At the conclusion of this meeting or sometime before lunch today, I will send over to your broker here just a packet, a little bit of information about what we do, where we're located. We've been servicing the Bend area for commercial and residential, actually light industrial as well, roofing for over 15 years. We've recently permanently got a new brick and mortar location in Bend, which will be also outlined in the packet you get. It's over on Northwest Wall Street. We really built our business model to service all residential and commercial, but we seem to have pigeoned ourselves into really just being a solution for realtors, and that started in the greater Portland market. And in that packet I'll send over later, we'll also include a few of the high profile brokers and brokerages that we work for and have had incredible success working with, getting realtors, buyers, sellers to get these properties closed. As you all know, there are a myriad of things that come up during escrow with respect to all things roofing, and I can drill down on any of it at any time on how we can serve buyers and sellers. And we're the quick solution to those problems. And so in a nutshell, what we have created really was birthed out of the 2008 housing crash. We started coming up with creative solutions. And it's not just us. The industry in general has moved to restoration and repair. So for a seller, there's obviously two planets that I'll talk about real quickly. Pardon me, I'm freestyling. This is not an official PowerPoint. It's what we do. It's all entrenched in our DNA here at Elements, so I can just explain the programs briefly. The two planets obviously are buying and selling, and their different needs and wants. But what we've had a lot of success with doing here for a buyer, for example, let's just start there. We offer free inspections. We typically get to them very quickly within a matter of 2 to 3 days. Those inspections can be forensic inspections, which are free. They can be general inspections. They're all incredibly professional. We have state-of-the-art platforms that we use to generate these reports, experts in the field gathering the intel. And we will typically offer a buying agent for their buyer two if they qualify, two separate estimates. So we typically will do a full re-roof estimate if it's needed, of course. And then in many cases, the general consensus will be that the roof needs to be replaced, but we can employ our state-of-the-art restoration techniques, especially with supply chains being so unpredictable, material being so high right now in the asphalt market, that we can provide alternative solutions that are 5 and 10-year guarantee leak certification, no leak solutions. So maybe you want to negotiate a new roof, but when the buyer takes possession of the property, maybe they don't want to spend, $30,000, $40,000 or $50,000 on a roof if Elements has a creative solution to buy them 5 to 10 years in time to allow for the market to settle. Incidentally, with all of our, you don't have to remember any of this, it'll all be in a little follow-up, by the way. With all of our repair and reconditioning restorations, anytime a client decides to re-roof during the warranty period, whether it be 5 or 10 years, Elements will credit the amount of those repair costs towards the purchase of a new roof. That's been a way for us to build a relationship, be a solution to an immediate problem, but then be there down the road. And we can talk about that, how that looks down the road later. But that is built into this program. So again, just to recap, for a buyer, really great process. You're buying a home. You can get a home inspection, which most of you do. We do like that because it kind of helps point us and just sort of speeds things up. But regardless of what stage you're at in the inspection period, call us, no charge. Let us come out there, pick the roof apart, find out what the issues are. Just as you all know, the inherent liability around missing those issues and the logistics of it is a nightmare. We've all seen it. We've all been through it. And so we're saying, let us look at it first. Let us diagnose it first. We can take an aggressive stance to give you more negotiating tools, and we can usually come up with a restoration option that your new buyer might be interested in, or even perhaps send it, and depending on the situation, it's not uncommon for a buying agent to send that information straight to the seller, and the seller is responsible for it. And we'll usually advise you if we think that we're opening up a huge can of worms. Potentially, we'll usually try to tell you, it may be better for the seller to take responsibility of this, so you don't have an unending issue to do with it. Those are all the dynamics that you guys work out in your individual deals. We're not going to cross that boundary. Then the second planet is if you're representing a seller, and that's one where really helped a lot, because obviously a buying agent will come in, they'll get their opinion, and a nervous buyer from California who maybe hasn't even seen the property is going to say, look, the guy we hired said it's a new roof, the home inspector wasn't happy with it, and we want to negotiate a new roof. Elements will come in on the seller's behalf, and again, we can take a conservative approach. We always give an honest forensic inspection based on minimum workmanship standards, uniform building codes. I will shut up a minute. After I'm talking about our product, I'll just briefly tell you a little bit more about who we are and our credentials. But for now, I'm just going to stick with how, moving from how we can benefit a buyer to how we can benefit a seller. So what we're telling sellers and seller agents is, even though it's a seller's market, those things can change quickly. We're saying, let us come out, let us give you an inspection, let us call out those issues, let us send you an estimate to correct those issues. We know you don't want to replace the roof. We know you're selling the house, so we're going to always take an aggressive stance in leaning towards trying to find a restoration option for you. Get those, hire us to correct those issues. And then we guarantee in writing three things. One, a minimum of a 5-year roof certification, which starts after within 4 months of the completion. So we give time for the buyer to take possession and still have a full 5-year certification. Minimum of if it qualifies, minimum of a 5-year no-leak warranty transferable to the buyer. And most importantly, that credit also transfers to the buyer. So if the buyer hates the color in 5 years and they want to re-roof, we will still credit that buyer those repair costs towards the purchase of a new roof during that warranty period. And really a fourth leg of that stool, which is more important than all, is we're guaranteeing to get that sale through an inspection. So when the buyer hires an inspector during the inspection period, and he calls out some weird flashing on a skylight or something that we just have to explain, or perhaps something we missed that's nitpicked, caulking on a screw head, anything could happen. We're guaranteeing that we'll come out and remedy that situation for no additional charge, because we've already said it's certified. We've already corrected the issues. So we're guaranteeing to get that sale through an inspection. The comfort and security that gives to a buyer, especially from an established company with over 11 million square feet under warranty, which is us, and thousands of satisfied, certified homes, it's unparalleled. And we've had tremendous success in Portland with many of the big companies, all the producers, and I'll give you that big fat list. We're the go-to solution. The thing we hear most from realtors is like, oh my God, we love you. Where did you come from? This is great. You're solving our problems, because we're not only back to the seller situation, calling out those issues. The inspections are done within 2 to 3 days, and those corrective work orders, if we're hired to do it, are done before close. And it's usually within a week or two we can get to them. And we've moved our entire company around, a great part of our company, to cater to realtors because, A, we saw the need, it's good margins for us, and it's a great way to build long-term relationships in the marketplace. So that's a nutshell of what we can do for you. And we're just saying, like, when in doubt, call us. You have one little issue that gets called out on a report that doesn't scare us, call us. Our job is to help you get that property closed, and everybody wins in that scenario and in every way. And I will just conclude with Elements Roofing. As I mentioned, we've been in business since 2007. We have over 11 million square feet under warranty. We are a 5-star Shingle Select Master applicator for CertainTeed Corp. So we're a factory installer for CertainTeed Residential, which is the 3rd largest shingle manufacturer on the planet Earth. Been in business since 1904. It's, in my opinion, the highest quality product. We are certified in all metal fabrication, design, and installation. We are the only one of only 2 companies in the entire state of Oregon that is certified with CertainTeed Commercial as a Gold Star factory certified installer. That means that we do all their warranty work, et cetera, and we can offer no dollar limit warranties on commercial. We have a client list a mile long from iconic structures all through Oregon and downtown Portland, from skyscrapers to double wides in Gresham. So we love Oregon. Bend, I personally, my last career before I decided I needed to cut my hair and raise a family was that I was a professional skier. I'm still a big mountain skier. I was an alternate on the pro. I was on the Pro Mogul Tour. I was an alternate on the ski team for Freestyle Moguls. My whole history personally is mountains and snow, and so we know snow country really well. I've been doing this a long time, and needed more excuses to get over to Bend. I'm in the Tigard store today. I have a partner/owner in Bend full time. We have crews in Bend full time. I'm back and forth, but I wanted to be the one to reach out. Kind of unusual. We do no advertising. I rarely do PowerPoints like this. Everybody just knows us, but we're really trying to gain more market share for you guys, especially in that market. So I was really excited to be able to talk to you. Happy to field questions. And you, again, don't have to remember anything I said. Our bio and all the information will be emailed a little bit later today with a couple of company brochures.
Okay, thank you, Ben.
There you go.
Thank you so much, Ben. Does anyone have questions of Ben? Any questions? When he reached out and we talked about free inspections with that was one of the things that intrigued me. Also, the guarantee and the transfer of the warranty and all that. I know sometimes we get caught up in our home repairs with roofing companies that just can't get out there. So obviously having another option and then another person to call who might be just an answer that we're looking for. That's why I invited him to be a part of this meeting today. Any other questions for him at all?
Yeah, and I also just want to say, we understand that you have working relationships. We are not new to Bend. We're not making a move into this market. We've been actively working, completing large-scale jobs throughout Redmond and Bend for over 15 years, and we've had a massive presence there. We've just focused more on the re-roof commercial market and in Bend. We understand that you have relationships. We understand you have your go-to. We're not interested in breaking those relationships. All we're saying is, if you have a roofing problem and you need it fixed, give us a call. We're here. We're not going anywhere. And I'd love to meet y'all in person someday, but just get our information and feel free to call us when you get in a jam or you have a question about a roof.
Great. Thank you so much, Ben. Just make sure you send me all your information and I will forward it on to the broker. I hear some people saying thank you. Thank you very much. Appreciate that so much.
Enjoy the summer, guys. We'll see you out there.
Thank you. Thanks so much. Okay, if no other questions, let's get moving on right away to our market report. Let's share my screen and we'll get going on that. So here we go. So it's an interesting market right now. So I want to go into a little more in depth as to what we're seeing nationally and locally. And we are seeing this. It's about mortgage rates. I think we're all seeing a change to our clients' buying power when it comes to the fact that our mortgage rates are going up. And let's talk about it, because it's coming as a shock, because it's just like we were all kind of cruising along, doing really well, and then all of a sudden it's a big uptick. Just like the same thing with gas prices, inflation. It's like all of a sudden where we were going is just changed, and it feels really strange. And so for us representing our clients in a market that's changing, it's great to have good information that we can use to give them assurance and to let them know that we really are the professionals who understand what's happening in our market. So let's go on to the next thing. So I pulled this data here from yesterday from Freddie Mac up here. It's what's happening with mortgage rates. Now, as of June 2nd, the chief economist of Freddie Mac said mortgage rates continue to inch downward this week. That was of June 2nd, but are still significantly higher than last year, affecting affordability and purchase demand. Heading into the summer, the potential homebuyer pool has shrunk. Supply is on the rise and the housing market is normalizing. That's a good word, normalizing. This is welcome news following unprecedented market tightness over the last couple of years. In May 19th, same economist quote there was, economic uncertainty is causing mortgage rate volatility. And that is true as well. So if you look as of June 16th, where are we with mortgage rates from Freddie Mac? The 30-year is at 5.78%, 15-year 4.81, and the 5-year ARM at 4.33. We haven't had ARMs for a long time, and it's interesting to start seeing them become a viable option in the mortgage world. We will start seeing things like that happen as rates go up. So this was as of June 2nd, in which rates had started to somewhat had gone up and had gone down. But again, at 5.78, we need to extrapolate this chart up to a higher point right here. So this was as of June 2nd, but again, going forward, I had shared this before, but let's look what we are compared to the last 5 decades. So the current rate, which is now 5.78%. So again, this is a little bit old, but 5.78%, we are still historically below the 6.27 of the 2000s, the 8.12 of the 1990s, the 12.7 of the 1980s, and the 8.86 of the 1970s. So again, look at the last 5 decades. Look at where we are right now. Yes, it's a shock. You know, going from the 2%, 3% rate to a 5.78% is a shock, especially as quickly as it's done, as it's gone up. But again, being able to let people know in comparison to where we have been over the last 50 years, this is a good rate. So we're not perfect. We're not perfect as far as what we do as real estate agents, but we are experts in what we do. We have expert information to be able to pass on to our clients. And so think about the fact that we are people who are working with our clients, providing valuable information that can help them make their big financial decision regarding purchasing or selling a home. So something to think about too, that the low rates of the last few years were an anomaly. That is a good word. It's an anomaly. Interest rates of 2-3% is an anomaly. It's a combination of frequently low interest rates and the Federal Reserve intervention in the bond and mortgage-backed security market. Now the Fed has ended the quantitative easing and it's raising rates. But what really matters is what happens to the 10-year bond yield, because that determines mortgage rates. And that's true. We've talked about that before. So let's take a look at that. So over the last 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury yield. We looked at this. I looked at that 10-year Treasury yield today. The average spread is about 1.7 points. So this is where we are as of last, actually, this is where we were as of 2 days ago. It's now dropped a little bit. The Treasury rate is at 3.25% as of this morning, with a 2-point spread between the mortgage rate and the Treasury rate. So understanding that our mortgage rates, they follow what happens with the Treasury rate. So if you're wondering, look at the Treasury rate and then extrapolate. So the average is 1.7. Again, right now it's at about 2.2. And we're anticipating a rise. So are we in a housing market correction? A lot of people are asking that. Understand that a correction is a decline of 10% or greater in the price of a security, asset, or financial market. So here's where we are for home forecasts for 2022. This is what the average of all the major forecasters has been, of 8.9% increase for all of 2022. Now we know that the first quarter started with a big increase. Second quarter, we saw that starting to taper off a little bit, but Fannie Mae still predicts 10.8% increase across the country for home prices. The lowest is the Mortgage Bankers Association at 5.8%. So are we going to see a decline of 10% or greater in the price? The housing market is at a turning point. We're starting to see signs of a new direction, but the ball is still in the seller's courts in most housing markets, which is totally true. So think about this. Let's look at showings, and there's the Showing Time Monthly Index. If we go back to the pre-pandemic time of 2019 up into the pandemic, these were showings that were across the country. Then we had the blip that when COVID first hit, everything dropped off. But then when we started having the stay-at-home orders and people started recognizing the value of a home as not only a place to sleep and eat and raise your family, but also a place that could be a gym, that could be your retreat from the world, as a place also to work and also educate your children. The value of home increased to the point in which people massively moved into homes and moved to an area where they wanted to live. And look at what happened with showings. They skyrocketed up. And we know this is what happened during these couple of years of the COVID pandemic. We had so much interest in housing. Now things have dropped off the end of the year. That's traditional. Popped up again January, February, and March. And now April dropped off. I know April it's old news. You can see that it started to drop off. And we're going to anticipate that things are going to drop off more. But are they going to drop off back to the pre-pandemic time? I don't know. The pre-pandemic time, think about 2018, 2019. Those are great real estate years, absolutely wonderful real estate years. It was a more balanced market. We had inventory coming on board. We had buyers. Buyers were not in a buyer frenzy. We didn't have the multiple offers. The asking price might have been what the sales price was, but normally offers came in under asking price and then you negotiated from there. It was a more balanced scenario. And again, remember, those were great real estate years. Happy clients, happy brokers, sales happened. It just wasn't at the crazy rate that we were. So where are we going? Again, pre-pandemic, where we are right now, we're still way above that. We're going to anticipate though, May, June, July, showings are going to start dropping off, and they are dropping off. I'm hearing from people right now, we are definitely in a correction. But also, what is that going to mean for existing home sales? So again, you go back to the pre-pandemic time. This is the seasonally adjusted annual rate, 2018, 2019, at 5.3 million. Great years. 2020, we had the dip, and then we had the boom, and of course 2021 beyond anything we've ever experienced before. But so far in April from 2022, we're ahead of the pre-pandemic. And again, the source of this information is from the National Association of Realtors. So average days on market. Across the country, we're starting to see an uptick on the average days on market. The national average day is now 17 days. In our market, we'll talk about that a little bit, but you know, days on market are still low, but they're starting to grow. And we're starting to see some houses sit, especially those that are now overpriced for the market. So days on market are growing. The average number of offers. Again, still seeing a number of offers on homes. This is as of April. Again, the May data is not yet been published, but April we're seeing that we're starting to have some fewer number of offers per home, but still there's still a lot of demand. So what's ahead? So recognize in an inflationary time that real estate is one of the time-honored inflation hedges. It's a tangible asset, and those tend to hold their value when inflation reigns, unlike paper assets. More specifically, as prices rise, so do property values. Also think about it from a perspective of someone who has purchased a home and has a fixed mortgage. As inflation goes up and as gas prices go up, and as the cost of travel with air flights, things going up, when you have a fixed mortgage rate, you can anticipate how much that home is going to cost you every month when you write out your mortgage bill. It's fixed. So, but the thing is, every time you make your mortgage payment, you're paying into your equity on the home. And again, with inflation, prices go up, and so do property values. So here we are as far as what happens with home price appreciation versus consumer price decreases over the value. So we're looking at where we are with the inflation rate. In the 1970s, inflation rate was at 7.1%, but home prices appreciated 9.9%. So if you look at where we have been traditionally, inflation goes up, but so do normally home price appreciation. There's a couple of little changes here. In the 1980s, it was a little bit less. And again, in the 2000s, a little bit less. But every other decade, look at where we are with inflation and look at where we are with home price appreciation. So again, traditionally, that is how the market has been. As inflation goes up, home price appreciation goes up more than inflation, traditionally. So we're starting to hear these national and local headlines. People are getting nervous. They're talking about the cooling housing market enters into the great deceleration. Home prices decelerate as the housing market downshifts. What does deceleration mean, however? Decelerating home prices do not mean depreciating home prices. So think about it, deceleration versus depreciation. Depreciation is what we had during the housing recession, when home values went way down. What we're talking about as far as deceleration is the increase in the rate of growth. So when we were accelerating and having, month compared with a month previous, month a year before, of an increase in the home value of that same property of 30%. This spring we were seeing 18%. We're talking about a deceleration in the rate of growth. So getting back to a more normal market, such as what we had in, here, this is what the estimates are showing, December as forecast in Q2. They believe that home prices across the country will increase by 9.3% in 2022. In 2023, back to 4%, 2024, 3%. 2025, 3.5, and in 2026, 4%. This is normal. This is a normal price increase year over year in real estate. What we've been seeing over the last couple of years is abnormal. It's not a normal price growth. So if we drop back to a normal price increase, that's what we should anticipate and what we should expect with people who own real estate. And this is, again, what people are estimating is going to happen in the future. So again, all of this suggests you can't time the market or the future of interest rates. If you're waiting for rates to fall, you may be waiting for a long time. So for people who are waiting for prices to go back to the 3%, the 2% before they purchase, they may be waiting a long time. And as prices continue to go up, is that costing them equity in a home? Is it costing them the opportunity to buy now versus later when that home, even at a 3%, 4% growth, which we're anticipating in the future, it's going to be more expensive. And again, who knows what's going to happen with rates? They changed going from the quantitative easing to the increase in interest rates. Treasury bond will be going up. So we can anticipate maybe back to the 6% interest rates for home loans, or right now at 5.78. Different kinds of loans will become available. So the chief economist from the Mortgage Bankers Association believes that mortgage rates are likely to plateau near current levels. And again, the financial markets have attempted to price in the impact of the Fed's actions over the cycle, and they're likely to also and they are likely also pricing in the economic slowdown that will result. Once we're past this rate spike and associated volatility, Mortgage Bankers Association expects that potential homebuyers may be more willing to re-enter the market. People are in a shock right now because it's just changed over a couple of months so quickly. They talk about interest rates rising in an elevator and coming down by the stairs. So we saw steps down, but all of a sudden we've just shot up, and it's a shock. It's a shock to everybody. It's a shock when you fill up your tank at the gas station. It's a shock when you go grocery shopping. How much does that cost? What? I mean, I have one bag of groceries, just a small bag, and it's $80. You know, when did that happen? You know, it's people are under a shock. So once we get past the spike and associated volatility, the chief economists believe things are going to be leveling out. We'll get used to where we are. We'll see. And again, the 2022 total home sales forecasts, this is for total 20, we're still anticipating high sales across the country because again, we still have housing demand. People are still looking for houses. There's been a lack of inventory, and we still have people out there looking. Freddie Mac anticipates 6.9 million in sales. That's phenomenal across the country. So experts don't believe the market's in a bubble or a crash is in the cards like during the Great Recession. The nation is still suffering from a housing shortage that has reached crisis proportions at a time when many millennials are reaching the age when they start to consider home ownership. And that's likely to keep prices high. We still don't have inventory. We're seeing an increase in inventory, which is good, more options for buyers. If we have more housing than we have buyers, we're going to start seeing some more corrections, some more price adjustments. And we're starting to see that right now too. I mean, every day when you go into the hot sheet, I'm sure you're seeing price adjustments. I rarely see price adjustments going up. They're usually going down. Having that discussion with your sellers when it comes time to listing, let them know that right now is not what it was last summer. Things have changed. And so if their goal is to sell their home, they have to be realistic as to current pricing. Even having what happened 3 months ago, where prices were 3 months ago, is not where they are right now. So what is a recession? The National Bureau of Economic Research defines a recession as a significant decline in economic activity spread across the economy lasting more than a few months, normally visible in real GDP, real income, employment, industrial production, and wholesale retail sales. You hear people often quote that it's 2 quarters in a row of negative growth. We've had 1 quarter of negative growth. I don't know how second quarter is going to totally shape up because we're going to finish the second quarter in a week and a half. But are we entering a recession? Some people say we are. I saw on the news that some quote somewhere said that 40% of American economists believe we will enter a recession sometime this year. So I don't know if we will or not. But what can we anticipate with housing if we enter into a recession? Remember that recession doesn't equal a housing crisis. It does not. These are the last 6 big recessions that we've had in the country. going back to the 1980s. And we had housing growth of 6.1% in 1980. In 1981 of 3.5%. 1991, we had negative growth. This was a small recession that lasted about 7-8 months. I looked it up. I was confused as to what that recession was. I lived through it, but I sure don't remember it. Obviously, it didn't make it didn't impact me that much. 2001, we had a recession, but we had growth of 6.6%. And the big one here, of course, was 2008. And understand that this recession in 2008 was caused by the housing market. It was caused by poor lending practices, the no-doc loans, the bundled. You got a mortgage. Oh, here's your HELOC on top of your mortgage, and people leveraging things and flipping homes, and it was a pyramid scheme, and everything crashed because it was built upon no true value. People who were getting homes who couldn't afford to make the payments. So again, that was the recession that was significant, lasted several years, and it was caused again by poor lending practices. But recession here in 2020, the COVID crisis, look what happened there. We had growth across the country. So it does not mean that when we have a recession, we're going to have a housing crisis. So when people talk about that, and I know people will be coming up to you, well, if we do enter into recession, we are dealing with high inflation right now. They're saying, well, when's the housing market going to crash? You can say, statistically speaking, and based upon history, it doesn't mean that we're going to have a housing crash. Also understand right now that the people who are getting loans are well vetted. People who get loans have to prove they can pay them. And I just know from reviewing all of your deals over the last couple of years, we have people who put significant amount of money down if they're getting a loan. I'm just now starting to see FHA loans coming back. Because FHA loans, if you were representing a buyer who was going in a multiple offer scenario, and this buyer was funding with an FHA loan, financing with that, versus someone who had a conventional loan with a good 20% down, that conventional loan was winning every time, especially when they were waiving the appraisal or making up the difference between the appraised price and the mortgage and the sales price. Again, an FHA buyer didn't have the wherewithal to be able to do that, didn't have sufficient down payment. And so we're just now starting to see those kind of loans come back into the market. So that means all the things that happened over the last couple of years, there's a lot of equity built into those homes. So even if someone loses their jobs or gets behind on their payments, if they need to sell their home, they can probably pay off all of the balance on their home and walk away with money in their pockets. So unlike 2008, where people were leveraging their homes and buying vacations and sending their kids to college on their home equity, buying boats and toys and various other things, it's just not like that right now. So having that head knowledge, when people ask you about it, you can come back and say, look, this chart is really, really eye-opening, and it really helps people understand that a recession doesn't mean we're going to have a housing crisis. So again, people who are looking to buy a home, if you're looking to buy, I still recommend you do so even at the higher interest rates, because we have no reason to believe that home prices will stop appreciating. Home values going up is only a problem when you're trying to buy. When you own, it's a gift. And again, remember, every time you make a mortgage payment, you're paying into the equity of your home. It's how people build wealth, and they have been building wealth through home ownership for decades. So some updates. Oh, excuse me. Done with that, let's get into what's happening actually for our office and also kind of in our local market. So here's what happened for us in May of 2022 and May of 2021. So our listings were up significantly versus 2021. We're up 65% of the numbers of listings and up over $11 million in volume. Our pendings were down slightly, just slightly though, 8% down, but the volume of our pendings were up $8 million in volume. So that tells you that the volume is, you know, homes, again, more value to the homes that our clients are entering into. Again, we've known mortgage that prices have gone up. And so as a result, when we're selling a home, even if it's the same kind of home that we sold the year before, usually the price is higher just because prices have gone up. Closed volume, almost exactly the same as the year before. And then year to date, almost exactly where we were a year to date, but with fewer numbers. So, but the volume almost exactly the same. That's what we were like in May. Now, this is when months started transitioning. June, we're starting to see more transition. So when we finish up with June, I'll be reporting on that next month. Here's the market summary for Bend Residential. So if you, again, we look at this, where we have been with active listings and new listings. And you can see that in May, that again is normal. As we move into May, we get more active listings and new listings, and actually they're almost the exact same figure. Sold listings were down here. That means we're building inventory. Listing prices, we are starting to see a leveling out of prices. This, the active median price has kind of been flat. New median price, a little bit of an uptick there, but sold median price is down. So we're not seeing the bidding up as much as we were before. We're not seeing that. So listings hitting the market, they're flattening as far as the prices. Absorption rate, where homes are sitting on the market longer. They're sitting over a month now. Remember last summer we were down to like 2 weeks of supply at one point in time. It was terrible. Now we're starting to see more options for our buyers. So that is great if you've got buyers that you're working with. As far as sellers go, if sellers, you have to let them know, guys, there's more on the there's more competition on the market now. So if you want your home to stand out, let's price it so that buyers see the value in it. Sold to list ratio is dropping. We're still seeing homes selling close to asking price, but it's gone down compared with what it was a few months ago. Days in the market, right where they are there. So, and then the price volume, again, as we move into summer, we normally see an uptick in our listings, and that's normal too. That's a good thing. Not as much compared March, April from last year. Again, a little less inventory. I don't know if the new construction coming on board is coming on board anywhere near as fast as it was. There's still supply chain issues. You guys who are out there in the market more than me obviously would see what's happening. And again, here again is my normal data that I look at all the time, May, and I'm comparing 1 month versus the month the year before. So active listings compared with the year before, we're down 20%. New listings were up a little bit. New pendings in May up significantly. Sold's down a little bit. Sold volume up. Average sales price, again, up 23%. But the median sales price up 17%. We're not seeing the 30% that we were earlier in the year. Percentage, home selling at the percentage of the list price, again, still over asking, but a little bit lower than it was the year before. Months supply, we're up closer to a month and a half supply, which is, again, a very, very, very good thing. So does anyone have questions on this or things to contribute? Because I really like to hear from you as to what you're seeing in the market.
Good morning,
Yes.
Lynette. This is Jane.
Yeah. Hi, Jane.
I did see a report that said that the one worry that we had was, and it was from Oregon Live, talking about the lack of inventory in the Portland area, but it also mentioned that especially in Bend, so for example, in the Portland area, 1 in 5 households in the Portland region can now afford to buy a home. It's comparable in Eugene, Medford, and Salem. It's even worse in Bend, where only about 1 in 10 households can afford to buy a home.
Yeah.
They're
mean, the
not
price.
talking about anything different about what you're saying here. They're just saying the affordability is getting bigger and bigger, and that's just, it's awful.
Yeah, I totally see what you, that is totally true. Again, look at the median sales price. Last year at 628, this year at 740. That's a median sales price. That means the homes that are selling are going up in cost, and that means there's still people who are willing to buy them. So where are the affordable homes? When did affordability be under 500,000? We are seeing people who first-time home buyers are basically knocked out of the bin market. We're just not being able to see unless they can somehow combine resources. And we're hearing stories about like a brother and a sister or two brothers pooling their resources and buying a home together so that they can, because by themselves they can't do it, but pooling together they can. Or I talked with one of our brokers who said that they've been looking and looking and looking, and finally their client got into a contract, but it was in La Pine. So again, the outlying areas are where people can afford to purchase. And again, that creates issues with commuting, with gas price. If their jobs are in Bend, you're having to commute in from La Pine or commute from Redmond to Bend. It is an issue. Definitely the affordability aspect is a challenge for many, many people. Yeah. Jane, do you have more to contribute there?
No, not at the current time, but I agree. It's just trying to find affordable properties. Parlish have got the development up by Pine Nursery that was supposed to be affordable, and now they're all over 500, which is not affordable. Everybody's talking about, yes, we're going to put in affordable housing. Nobody really knows. It's like the change, in our city council, they do it behind closed doors and nobody knows what the hell's going on.
Well, the affordability aspect, I mean, there's different kinds of housing I know that is being encouraged, such as townhomes, condominiums. That's often where first-time home buyers can get their start. Though I know everyone, the majority of people out there really want a single-family home. But getting started in something, that they own, a condominium, a townhome, I know that the current thought process across the state is they want to encourage higher density housing. And so they're going to be definitely encouraging and pushing for that kind of housing to hit the market. And that's an option for some people. I know Bend has been putting in a lot of apartments, but that's not housing that people can purchase. That's apartments where you can live, but not necessarily, definitely not build equity for yourself. What else are you guys seeing out there? What else are you hearing? Anyone else have something to contribute here? Okay, if you don't, how about haves and wants?
Hi, this is Catherine.
Hi, Catherine.
Hi, I have a want, and it's a small want, but it's somebody looking for a fixer around 350,000, cash buyer, and just interested in an investment. And he has recently told me he's holding off to see what happens in the near future. So the information that you gave today was great, and I'll be able to sit down and talk to him about that.
Right. Yeah, 350 fixer.
Yes.
Is he limited to Bend, or can he move outside of the area? Can he go to outlying areas?
Outlying areas are fine. Yes.
Yeah. Maybe something might hit the market in La Pine.
Yeah.
Prineville, maybe Madras.
Prineville, Madras, or like Culver, Terrebonne area.
Yeah. Sometimes Crooked River Ranch area too.
Oh yeah.
Yeah.
Yes, so that would be great to help him out. I think he'll be a good client. So if anybody knows of any fixers, he has people who could come in and fix it, and cash buyer. So
Perfect. Great.
yeah,
Thanks, Kath.
thank you.
Yeah. Any other haves or wants, anybody?
Hey, this
Julie?
is Julie. Yeah,
Hi, Julie.
I have hello, everybody. I have someone looking for land over, I would say at least half an acre, but preferably a little bit more. Mountain views up near, Tethero, Tree Farm, or Westgate area. But I mean, they can go up to $1 million, but they could probably do a little bit more if it's amazing views. But yeah, let me know if you have anything coming up.
Do they need to have developed land, or can it be just bare land that they have to bring in everything themselves?
I mean, they want it in one of those communities ideally, but yeah, I mean, they're more interested in building, or if it's kind of a more modern design, like a lot of the Tethero homes, and it has amazing views, they would consider like 2-3 million for a home, but lots of light, lots of windows. But I think their main preference is to have some land because he has his own architect.
Oh, perfect. Okay, so just land. Yeah, you should be able to
Yeah.
find something. Yeah.
Yeah, there's some out there, but they don't have the mountain views. It's like views of the golf course, or they kind of want, yeah, they're pretty specific on that.
Mountains. Okay, very good. All right, thank you, Julie. Any other haves or wants, anybody? Everyone's pretty quiet today. Anything else for anybody? Okay, if not, tomorrow there is a principal broker forum over at CORE, and I will be attending that. I'm going to be out of the office most of the day tomorrow. I'll be in and out some, but I can obviously take phone calls at breaks and stuff, and I'll have my computer with me. So, and if you have any questions on anything, Emily and Brittany will be in the office to help you with your marketing. I know we've got a lot of stuff here, and I hope you all have a chance to meet Tiffany, our new broker here who joined us. She's got a new listing coming on board next week, which will be a really nice one for you. Hopefully we can have if you have a buyer that might work for her. And we have a lot of new listings coming on board, which is great. Obviously having inventory to sell is great, and also it's more options for those of you who work more with buyers. So I hope you have a great day, and if you have questions with anything, just feel free to ask. Talk to you guys all soon. Thank you so much.